How do you know when it's safe to circle back to a formerly high-flying stock that's been beaten down for maybe all the wrong reasons? Look at Nutanix. It's the cloud infrastructure play that deals in what are known as hyper-converged systems. Earlier this year, the company announced that it was adopt a software-as-a-service business model. You know, we like those. Something that's worked wonders for everybody from Adobe to Autodesk. However, this kind of transition can do some real near-term havoc and damage to your numbers as you trade big one-off software license sales for lots of smaller recurring payments. Sure enough, Nutanix saw its stock plummet from 53 in February down to 17 and change in August. But in the last few weeks, it's shown some signs of life, especially since the company reported an upside surprise late last month with guidance that was good enough for investors to start giving them the benefit of the doubt at last. Now Nutanix is back to 26. It could have more room to run, but do not take it from me. Let's take a closer look with Dheeraj Pandey. He is the co-founder, chairman, and CEO of Nutanix. Get a better sense of how his company is doing, where it's headed. Mr. Pandey, welcome back to Mad Money. Good to see you, sir. Good to see you.
Thank you so much.
All right. Now, Dheeraj, you yourself have said that it is hard to spot the underlying growth because of the subscription transformation. Explain how even you have to admit that it's harder to spot.
Yeah. First of all, thank you so much for inviting me on our 10th year anniversary. We
Oh,
just finished 10 years
congratulations.
today. And it's been a journey of a lifetime. You know, we've had to put 2 model changes in the last 10 years.
Right.
And it's not easy, as I was saying, you know, in that treatise. You know, at some level, the idea that you're going from one business model to another also has all these comparables of apples and oranges built in. And subscription, I mean, the first thing is why? Why subscription? And I go back to this new era of subscription economy, you know, iTunes versus
you know, we like that on our show.
Spotify. You know, I think, you know, people thought Apple had digitized music, and then there was Spotify that digitized it even further with subscription. I think our customers are looking for piecemeal, bite-sized infrastructure, just continuous consumption, continuous delivery, and doing a lot of this stuff going from TCV, which is total contract value, to annual contract value.
Oh, big change.
We explain a lot of that stuff, actually. You know.
Okay, now, we have Sanjay Poonen on, and you're no stranger to him. He's COO of VMware, and he's making some really big deals. And sometimes I wonder, is this hyper-converged market big enough for both of you? Tell me how big it is and whether you have to fight tooth and nail against these guys.
You know, the most important thing about our market is that it's ever expanding. We were hyper-converging boxes and machines on-prem, and now we have to hyper-converge clouds. Because people are really saying, can you take your software to the public cloud?
Right.
And, you know, Fortune 10 companies that have spent tens of millions in the last 12 months with us and doing subscription are saying, let's take you to public cloud as well. Because then the real question to hybridizing your overall experience is where hyperconvergence becomes relevant one more time. So we don't look at ourselves as a private cloud only solution.
Right.
Many of our customers are saying, let's go and solve this problem between on-prem and off-prem.
Okay, now, Deutsche Bank, which has a hold on you, put out a headline that I think sometimes captures it. It makes me more concerned. I want to be sure it's just not subscription week. It's called Better Than Feared, but Still Messy, implying about worrying about share losses to Dell VMware. How can you give us some assurances that's not happening?
Well, eventually it goes back to what are we really, what do we stand for? It's reliability, reliability, reliability. Reliability of products, reliability of customer success, of customer support. So Fortune 100 companies are actually looking at Nutanix as the more reliable product than anything else out there. And I mean, one of them, for example, a Fortune 5 retailer, they're spending tens of millions of dollars with us simply because of reliability. And I think we want our competitors to go and market this whole idea of hyperconvergence.
Right.
Because without them and their marketing dollars, we can't be the only one going and doing this. The market will grow because of more larger companies in this space.
Okay, so in the last quarter, you had 71% fourth quarter 19 subscription billings mix, plus 19 points year over year. What numbers should we be looking at to try to figure out exactly when things cross over, and we should just say it is apples to apples?
Well, so in the last 12 months, I would say last 9 months, you know, we really said, let's plow through this transition.
Right.
71% of our business is now subscription, which is from where it was a year ago to where it is today.
That's quite impressive that you did that.
And annual contract value, which is now the new currency in which we're measuring ourselves, is growing 61% year over year. It's $500 million plus already. So I think the coming 3-4 quarters is where we are really focused on making sure we plow through this whole thing so that then the street can do apples to apples.
Right. Now, how about partnerships? Where are you guys?
Well, the best part is that this HP partnership has looked great for us. They're also talking about subscription and the subscription economy. What we're doing with them with GreenLake, where they'll sell our software.
Right.
I think that's going to be a big piece for us. What we're going to do with the hyperscalers is another big piece. I think that's the place where it's become extremely consumer grade. The partnership with hyperscalers is about APIs, and we are using our APIs to really go solve problems of hybrid cloud for our customers.
See, I know as someone who used to pick stocks for a living, I want to get in before the explosion. I feel like that the comeback is in large part because you've explained to people the progression. What will happen if there's a way? I'm trying to figure out, are there some big contracts that are about to occur? Will you be telling people at an analyst meeting that you just won these 3 big accounts? I mean, I don't want to miss the inflection, but I also don't want to hurt people.
Yeah. Well, I think the Investor Day in March is going to be a big one for us.
So that's
to really talk about the inflection point of the company. Would have gone through at least 4 or 5 quarters of plowing through the subscription itself. And I think in general, look, I look at if we didn't take the short-term pain, we would not have the long-term game of being a hybrid cloud company.
You had to do it. I said, Dheeraj, when I was at 16, I was thinking, I'm doing some work on Twitter in preparation for tomorrow. I have an interview with Bob Iger. He was talking about how when Twitter fell, it was a good time to pounce, in the low teens. So when your stock was in the low teens, I thought, you know what, Dheeraj is going to get a phone call, and he's going to have a hard time saying no. How do you stay independent knowing that we all both know what's about to happen?
Well, I think, look, we work for what I call at least, think about long-term gains.
Right.
And along the way, if there are offers that come in, we actually talk to those companies.
Okay.
And we realize what it means to think about coming together or not. And right now is a low. I mean, I wouldn't sell when it's low. When you have to think about how do you go through this transition first before you really talk about anything else.
All right. Well, look, we look forward and stay close. And I thought it was great that you came on. And I know a messy quarter, sometimes execs won't come in. But the model change that we saw, and we had Shannon Ryan, when he made the model change, and we believed, and no one believed. It was incredible. It's like us and Shantanu. But I'm so glad that we got on that, and I'm glad that we're staying close to you. Okay? Okay, that's Dheeraj Pandey, CEO of Nutanix, and the stock has made a very big turn, but it's still well below where it was. So it could be an opportunity. But you stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.